The Federal Reserve's biggest interest rate hike since 1994 will push mortgage rates higher. That means more home buyers may be priced out of the market. Earlier
this month, the Mortgage Bankers Association stated that its home buying and mortgage refinancing index dropped to a 2-decade low. Federal Reserve Chairman Jerome Powell addressed the housing landscape during a press conference on Wednesday. He said potential buyers need a reset and called the current market a complicated situation.
I would say if you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset. We need to get back to a place where supply and demand are back together, and where inflation is down low again, and mortgage rates are low again. So this will be a process whereby we do our work in a way where the housing market settles in a new place, and housing availability and credit availability are at appropriate levels.
Joining us now is Danielle Hale. She is the chief economist of one of the web's largest realty sites, Realtor.com. Welcome, Danielle. What do you think about what the Fed chair said just there? What will it take for home buyers to see the necessary reset? Many are just simply giving up.
Yeah, Chair Powell used the word reset. We've been using the word housing refresh. We need to see more homes available for sale for buyers. Ideally, it would be because builders are doing a better job of building and homeowners are deciding to make changes. We're seeing a little bit of that, but right now we're also seeing more homes on the market because buyers are pulling back. The Fed's actions, along with inflation, have driven mortgage rates up to some of their highest levels in over a decade. In fact, just today, we saw another big surge in mortgage rates, and that's making it more expensive for home buyers today to buy a home. And as a result, we're seeing demand soften a bit. Households have to grow choosier. It's getting harder to find a home that is available and falls within the budget. So we're seeing home sales soften as buyers grapple with these tough budget realities.
Well, this week, the Federal Reserve announced the largest interest rate hike in nearly 3 decades. What impact do you foresee this announcement having on the housing market?
Well, in the short run, it's pushing up mortgage rates. Already in advance of the rate hike, Friday's inflation data had started to send mortgage rates climbing again as investors anticipated this Fed rate hike. And we're seeing that today in the Freddie data. Mortgage rates surged again. By some measures, they're up above 6%. In the Freddie Mac data, they're just below 6%. Either way, mortgage rates are climbing, and that's having a big impact on how much home a buyer can afford. With higher mortgage rates, buyers are putting more of their monthly payments towards interest, and that's really decreasing their purchasing power in an environment where home prices are still high and haven't really come down very much. So it's expensive for buyers today, and it's harder to find a home that really fits the budget.
You know, there was this interesting study by one of your competitors, Zillow, that found that almost 50% of home buyers cry at least once at some point during the home buying process. We forget just how emotionally tied we are and how home purchasing is really all about your upward mobility. What advice do you give to the people crying at home right now because it's just they're priced out of owning property?
Yeah, buying a home is an emotional roller coaster, that's for sure. And even if you work in the housing industry and spend your time studying the housing industry, it can be an emotional roller coaster because it's where you live. Your home is where you spend the majority of your time, especially over the last couple of years, and it's where your dreams happen. So it is an emotional investment along with a place to live and so many other things to so many people, not to mention the biggest component of most household budgets. So how to prepare in this market? One, I would say get informed. Know what's going on in the housing market. Know that right now, even though we're starting to see some buyer-friendly shifts, we're starting to see more homes on the market for sale, homes are still relatively scarce. And so it's still a bit of a challenging market. Prices are high and it's tough to find a home. So be as emotionally prepared as you can be. Be financially prepared. So know what your budget is, know what you can spend, and know what you're comfortable with. And don't go above that. Make sure that you are really fixed on what you need in a house so that you don't have to stretch your budget in order to make a home work. And then, set your home search accordingly. You can use online tools like you'll find at Realtor.com to tailor your home search to only look at homes that are in your price range so you don't feel tempted to stretch your budget. And that will help you better find that home that actually is within your target without getting carried away in a still competitive housing market.
It really is such an emotional issue
Yeah.
because it's very much part of the American dream to buy
Right.
your home, and especially for a young person just starting out, very, very symbolic. I wonder, Danielle, about the real estate industry. So the housing market is quickly cooling off after years of price gains and bidding wars. What does this mean, this news mean for the real estate job market?
Well, it does mean that the job market is going through an adjustment. So businesses are making sure that they're hiring the folks they need to get the job done to serve their consumers. And we're seeing that across the real estate industry. So I do think we're going to see a bit of an adjustment because as we see home sales slow, that's going to mean some fewer opportunities for some companies. And as you said, we've already started to see that in some of the data. But I think the big picture is still that the housing market needs to go through this reset or refresh to get back to a place that's really healthier for everyone, for consumers, for the real estate professionals that serve them. And that's ultimately going to be better for everyone in the long run.
All right, Danielle Hale. Thank you very much, Danielle.
Absolutely.